Bitcoin is the reserve currency of the crypto economy. Bitcoin is the one central, certain, unshakable protocol and the fulcrum, the focal point of the entire industry. Everything else is built on top of it.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Michael Saylor reveals how Bitcoin could reach $21 million by 2046, covering scarcity, tech shifts, and bold predictions. Let's dive in.
There's been an unprecedented coalition that's come together in support of Bitcoin, and I think a realization that the entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future. And I think you guys should be very, very proud of that development. 12 months, what's going on? Bitcoin is still running harder than it has been, up 61%. The Magnificent Seven and the S&P are underperforming. They're struggling. The tariff wars, the trade wars have been a challenge for them. There's been a general mainstream lagging of confidence, and that's caused a surge in gold. But Bitcoin is running much harder than gold. Real estate soldiers on, and bonds continue to fail. Bitcoin's outperforming all asset classes this decade, too. So it continues with what you would expect, 56% on average ARR for the past nearly 5 years. More than double the Mag 7. That's more than about double the S&P. You've got gold, a little bit of a surge starting to catch up, but gold's still underperforming the S&P, and real estate less. This is an important chart. Here's what this chart is telling you. The cost of equity is 13%. That means that if a company's capitalized on gold, real estate, bonds, soybeans, oil, any other commodity, it can't beat the cost of equity. You cannot sell equity to buy real estate. It's dilutive. There is only one asset that a company in the world can hold that you can capitalize on that is higher than the cost of equity, and that is Bitcoin. And so you see the explosion in Bitcoin treasury companies is because now that the world's recognized a digital commodity, they also recognize it beats the cost of equity. That means that every public company, in theory, should recapitalize on Bitcoin, because when they sell equity, they're actually generating profits. They're creating an accretive transaction for their shareholders.
Michael Saylor, chairman of Strategy, formerly MicroStrategy, is once again lighting up the crypto world, and this time, he's gone full Bitcoin Superman. Known for his bold Bitcoin advocacy and massive BTC holdings, Saylor's latest move is both simple and powerful. With just 2 words, he fired off a message that instantly went viral. Take Compound BTC. It's short, but packed with meaning, and perfectly reflects his relentless focus on building long-term Bitcoin wealth. Just a day before, Saylor posted an AI-generated image of himself styled like Steve Jobs and echoed Apple's iconic slogan, "Think different." But this new post feels like the next evolution. It's not just about thinking different, it's about acting with conviction. With over 592,000 BTC under Strategy's roof worth nearly $64 billion, Saylor isn't just talking the talk. He's living it. Strategy's Bitcoin playbook has already yielded massive gains, with year-to-date returns of 7.4% and 19.2%, translating to over $9 billion. The idea of compound BTC sums it up: stacking sats, holding firm, and letting time do the heavy lifting. But the big question remains, what could stop this momentum? A global crash, rising inflation, a black swan lurking in the shadows? For now, Saylor is flying high.
Right? The world is waking up to this. You see that hints you see an explosion, in the shares of Metaplanet and Smarter Web and H100 and Blockchain Group, right? This is going to continue. These companies are going to catch fire everywhere in the world, in every capital market, for one simple reason. Investors can see that 56% is more than 13%. It's just that simple. And this is it's a very powerful dynamic. And yet Bitcoin is just 20 basis points of global wealth. So here's an interesting thing. We are now at an inflection point. We have all the information to know Bitcoin is winning, and yet the majority, 99.8% of the capital in the world, still pretends and acts like it isn't. Most is still oblivious. You know something the rest of the world has not yet acknowledged, and yet it couldn't be clearer to all of us in this room. There's a monetary revolution afoot, a revolution in economic thinking. It's spreading everywhere in the world. It's fueled by the digital transformation of the capital markets that you see manifested in all of these companies and all of these securities and all of this Bitcoin activity. And it's going to be accelerated by explosive financial innovation. That innovation is surging now. You can see it everywhere around us. Every single company is thinking, how do I integrate? What am I going to do? So the revolution is afoot. The world is bullish on Bitcoin. It's being adopted faster and more aggressively by governments, by banks, by corporations, by investors than nearly all of us thought a year ago, right? We were bullish a year ago, but certainly I'm hearing now BBVA is supporting Bitcoin. I'm seeing the Secretary of the Treasury saying it's okay for banks to Bitcoin. We've seen the explosion of all these Bitcoin treasury companies. I didn't think they would go so fast. I didn't think Smarter Web would go from £4 million to £1 billion in 2 months. Let's give them a hand. That's amazing.
Federal Reserve Chair Jerome Powell made headlines with a bold statement. Bitcoin and the broader crypto industry have matured and are becoming more mainstream. Speaking during his June 25 testimony before the Senate Banking Committee, Powell responded to questions from Senator Cynthia Lummis about how the Fed views the evolving crypto landscape, particularly regarding stablecoins and bank involvement. Powell acknowledged that the industry has significantly progressed since earlier regulatory stances were taken, especially under the Biden administration. The Fed's previous policy, outlined in January 2023 under Section 9-13, and raised concerns about banks engaging in activities tied to decentralized technologies like stablecoins and public blockchain networks. At the time, the board stated that such involvement was likely inconsistent with safe and sound banking practices. But now, Powell says the narrative is shifting. He emphasized that regulators, including the Fed, are reevaluating guidance made in crypto's earlier, more experimental days. The industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream, he said. Importantly, Powell expressed that banks should maintain the freedom to choose their customers and explore crypto-related activities provided they manage risk properly. His remarks suggest a more open, evolving stance, signaling a potential pivot in how traditional finance embraces digital assets. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.